Good morning, guys. Let's do a quick mic check. Is the audio and video that you should be seeing the charts right now? Okay, thank you, JD. So let's get started. So I had mentioned yesterday in the market preview that this entire area from 1810 all the way down to 1802 had been poorly auctioned. It looks like we're going to fill that in this morning. Obviously, we traded down in the uh, in the Globex session, and we needed to cover a lot of this territory that hasn't been covered. So my guess is usually we don't just simply cover it in the overnight, but that we recover that during the day session. So if I'm going to look, the first thing that I'm concerned about is it would be obvious for people to think, well, we need to go back in and fill and retrace. But I really think as long as we hold 1796.50 to 1793.50, that this is simply going to be a back and fill, and that I would look for shorts or aggressive sellers to get trapped down here for push back up. Of course, I'll be watching NQ again as a leader. NQ yesterday broke to new highs, then closed back, then traded back below the prior high, and it ended up setting up a trap for a trade to the other end of the range. I kind of would be looking for that mirror image today in reverse. So let's kind of go over what the scenarios are. It looks like we're going to attempt at least to open at 1806.75. We're still quite a bit away. But let's assume for now that we are going to open in this level. What I would look for out of the gate, assuming NQ is strong, is going to be a rotation up, and really I expect the rotation to be up towards 1810 and three quarters to 1812 and three quarters, testing yesterday's low, which is also the white zone. And I would expect responsive sellers the first time in, and that would also give me a very nice rotation into that zone opening here. Um, I think that this 1806, 1808 could get traded through either way fairly easily. So I think any trade that you take here, even with a good rotation, stands a good chance of getting blown through. And I rarely say that, but this zone belongs here. But really, if I were going to have to remove any one zone, I would actually take this zone out for the day. It is a support and resistance point, but I think it's been well tested in the past, and I think it will get traded through um, in both directions. So I'm cautious here. I'd rather go, well, I wish I had a trade there than not. The exception being if we get greater than a 7 point rotation into this zone, we'd be nice and stretched, and then possibly. But for now, um, I think I'd rather pass on this particular zone in terms of taking a trade, just because of the risk of passing through. So based on that 1806 area opening, I'm interested in taking actually a trade here. Actually, every one of these zones, I'm interested in taking a counter trade. However, one thing you have to stay cognizant of is I really think we could get a mirror trade and possibly, depending on the strength in NQ, come back up and test these highs. I don't think that we'll necessarily roll all the way back down to the downside. One thing I would keep in mind, I'd go and look and measure on your own charts what is halfway back from the swing low, because I definitely feel we'll find responsive buyers there. I believe it's 1782 is halfway back. I'll go and look right after the open and make sure that that number is correct, but obviously that's easy enough to figure out. The scenario that I'm thinking of is right. We're going to open up and then we'll get an initial push out of this area up at least into 1808, hopefully up into the white zone. We'd find responsive buyers, and I do believe we'll come back down and test this Globex low one more time. So once above the white zone, so remember, white zone is indicative of where buyers need to get above and have control, and where sellers need to have control, and it works like kryptonite, right? The further we get away from the white zone, the less influence it has, right? Also, time of day. Well, we've seen repeatedly that late in the afternoon, over at least the last five sessions, right? Buyers have had control, and we've very much followed this pattern where we get to 9:30 to 10:30 a.m. and we get responsive buyers and push back up, or at least find an area where we start balancing. And I believe if we look yesterday, exact same scenario, we pushed in, I believe, at 10:30, and that pretty much marked the low of the day, and we pushed back up. So let's look at how the downside scenario would work on the open. If we open at, again, this 1806 area, and we push down, this would not be a very large rotation. If I'm going to take the test of Globex lows, I'm literally going to be looking, this is assuming no push up. I'm literally going to be looking at the back of the zone if I take this area, but preferably I will take a trade based on that at 1800 to 1798, and again at 1795.50 to 1793.50. Now, in these zones, particularly these really from Globex low on down, for guys that leave a trailer, I think this is an excellent location to leave a trailer for a test of the white zone. If we get above the white zone, we would have people trapped both overnight and from traders during the RTH. It's very possible if we get above here, right, even though we come up into gap fill, that we could trade to the other end of the range, which at this point I'd have to consider Wednesday's high. Let's discuss what the trap trade would look like, particularly for people who are leaving trailers. If we open here, obviously the first trap trade would be getting back above yesterday's low, potentially. But if we come in and we trade below Globex low, and we either trade down to the 1800, 1798, or all the way down to the 95.50, 93.50, if we get back above Globex lows, that would set up the first potential trap trade up to the white zone, where as I said, that the first time in I expect responsive sellers, assuming at least 6-point rotation into that area again. If we don't get the 6-point rotation, I will still take the white zone. Just realize that it's a higher risk trade at that point, and that would set us up for a potential break back into the zone, and then a trade back up to the other end of the range. This is also Globex high, right in the zone above it, and it's also gap fill from yesterday's close. I would expect responsive sellers the first time in, and possibly all the way back down to the white zone, right? And then this becomes decision time. We can reverse trap this, by the way, if it works the other way. We get back above the white zone, we trade up to Globex highs. If we come back in, I would expect the first backside test to find responsive buyers. However, if that fails and we come in for another test and we close back below the white zone, it would set up a trap trade in the opposite direction, and we'd come back down and test initial support. Again, I'm letting the market, I want to be clear on this, I'm letting the market dictate where I think the appropriate trades are. What I'm particularly looking for is that 6-point rotation, and I'm trying to simply capture 2 points on 2 trades a day. That's my primary objective. So, if we open up, let's just say we open up here. We drive up into the white zone, where I'll most likely take a trade regardless, just realizing that it's a more aggressive trade. All I'm looking for is a quick 2-point rotation, whether that's from the back of the white zone or the front of the white zone. Once I get that 2 points, I don't care if it rotates back up and trades through. I'm not trying to call swings, generally speaking, and I think having set that kind of day up, that has caused confusion. My primary objective is simply to get the 2 points. So every time, even if we end up with the trend day down, if for any of y'all that follow me for any period of time, most days, each time we get to one of these zones, we get a rotation back up. Assuming that we've had a proper rotation back in, we're getting that 2-point counter trade. And that's all I care about from there. Now, if I'm leaving trailers and you're going hypothetically, what's my potential for a counter trade? Yeah, from here, I would expect that we would move up and possibly back into the white zone, or even come back in and test gap fill from this level. Well, if I'm trading from 1795 all the way back up to gap fill, that's a huge move. Also, remember, the ranges have been, outside of our balance day yesterday, our ranges have been really 15 to 20 points on days when we're not in balance. Days that we're in balance, the range has been 10 to 15 points, okay? That's much wider than the 2 to 8 points we had in balance just a month ago. So you have to keep that in mind, that even if the market goes nowhere and we have another balance day, it's certainly possible to have a very wide range and have a very nice swing off the lows. Looking at the trade from otherwise, and again, the trade I'm concerned about is NQ busting back above those highs again and holding this time. I'm certain there are a lot of people trying to short that double top, and it would create a very nice squeeze to the upside. Also, holding above this 1723 and a quarter, this is an open gap. If we can get above this open gap, not that I think we will, but if we do, it would create a very nice squeeze. And even if this comes near the end of the day, I would still expect responsive sellers at 1830. Again, that's quite a stretch. But in the last hour, you have to realize if we hold that 1830, it certainly sets up the potential for squeeze up to 1835 and then possibly 1840. Again, that's pretty much 35 points from where we are. It would be hard to picture that happening today. It would not be hard for me to see us coming back up and closing near Globex highs or at yesterday's gap. Okay, so I am looking for responsive buyers. That being said, let's also look at what time would we look for possible reversals, right? Again, I got to stretch that 9:30 to 10:30 spot, 11 o'clock is prime location to get a nice stretch back up to the upside. And if we're still down at that point, I am reluctant to press my shorts unless they simply don't come back up. And we just simply end up with a trend day down. So let's discuss what are the characteristics going to be to look for, because open drives and trend day up and down tend to cause retailer traders the largest losses, right? Most retail traders do not get on the right side of trend day up because we're used to fading. So what are the signs? Obviously, we're getting a gap down to, well, now we're trading down here at 1804. So that changes our scenario a little bit, right? We gap down, we don't get responsive buyers. It simply gaps down and goes, right? 1, 2, 3. If I get this scenario, right, the nearest I want to be looking to take a serious counter trade, right, will be at, hopefully near initial support, and it would be after 9:30 in the morning, right? I'd rather miss than not get it because the gross majority of the time, the counter trade happens after 9:30 a.m. So assuming if we have an open drive lower, I'm saying we will, but if we do, two things to watch out for. If we open it at an extreme negative tick, that means 1,000 or more, it is not unusual to get responsive buyers right out of the gate and push all the way up and end up with a reverse trend day up, right? We open down hard, the tick is very extreme, and what you'll notice is that the market does not go down even though the tick is weak. And slowly, if you'll look at the tick will start to drift up like this and keep going up like this. In this scenario, I will not reshort a zero tick. So let's go over what it would take for me to take a zero tick trade in this scenario as opposed to looking for a long out of the gate. So we'll gap down and the tick will not be at extreme. It'll be 600 or 700. And as the tick rises towards zero, if this is zero, the market will tend to do this and base sideways as opposed to responding with a tick. What does that mean? That means on the broader market, the NYSE, small non-S&P 500 stocks are being bought up while the S&P 500 is being sold into that strength. Now, lately, the way that pattern has worked has been instead of at the zero tick at holding, it's actually held. Once we get to the zero tick, we've gotten a push of 1 or 2 points up, but we have not cleared the high, and then we get the rollover to the downside. So I'll be looking for both these trades to set up, and you have to stay flexible. That being said, that does not wipe out, I got to stress, that does not wipe out that I still expect responsive buyers at Globex lows, depending on whether or not we open there and what the rotation size is, and certainly at these levels as well, right? I can get, let's say we're going to trend down to initial support. I would expect something like this. Here, up, down, and then finally possibly a pattern like that, and then a trade back up. Again, if we can get back above Wednesday's lows, assuming we trade above, that would create an additional trap, and that's not an outrageous idea, right? If we get a 20-point range from the lows, 1793 would easily bring us back up to the white zone at 1830, and then a small squeeze for the gap fill is certainly possible. On the upside, what does it look like to get an extreme reading? Well, we're obviously not going to get that, so I don't have to worry about that. Let's go look at NQ real quick. The chart's not complete. I have sent it to my coaching clients, but I think this is important, right? where is NQ opening relative to how weak ES is? ES is already down 12.5 points, right? I'm reluctant to short in the hole when we're down that far off the open. NQ is down 25 points. Let's remember recent ranges. 30 points have provided good rotation, counter rotation, and so have 60 points. Guys, in terms of scalping, for those guys who are running the scalp trade, again, 10-point rotations minimum, 15 points preferred. The red zones on NQ are where we have open gaps. So it looks like we're opening near the lows on NQ at 35.98. That puts us right here. We have an open gap about 10 points away, 15 points away. That puts us at 35.81.30 to 35.73.50. I will most likely be taking a responsive trade in here. Again, what I'd be looking for is if we can get back above Globex lows to squeeze and push to the other end of the range. I just get a feeling, right, when the market's as strong as it was, and Yellen basically putting a put in on the market, that we will get responsive buyers from levels lower. So, Damien, you asked me about any comment on the economic news, the jobless and retail sales. I have no comment on that because I don't look and analyze it. Other than this broader picture, right? Every weak economic job has been bought up, and the reason for that is quite simple. Everyone is betting that as long as there's weak, if it was indeed weak jobless news, right? Every time there's been weak jobless news, there have been responsive buyers from below because they figure that the stimulus will continue pumping, and Yellen has really pretty much indicated that they will keep the stimulus pumping as long as they haven't achieved their targets on inflation. So that's my general comment. I have not looked what the econ we have coming up after the market opens, and I'll look right now. Okay, so we have business inventories at the top of the hour. I don't think that's a very big number, so I wouldn't overly worry about it. It looks like the data that's out is already out. And again, if the data was weak, generally speaking, what's been happening is they've been stepping in. Again, how will we know if it's a different scenario? Okay, on the gap down at the first 5-minute bar, right, whatever the high of the first 5-minute bar, it has to be breached in order to wipe out the trend day down scenario on the gap down, right? So we open here, initial buyers failed to respond in the first 5 minutes. Whatever that 5-minute high is, if it's not breached, I'd have to assume trend day down. Also keep in mind the scenario. Because we have had such a large run, it would not be unusual to get a second balance day. So we could easily, both on NQ and ES, flip back down. So I think I've set this up again to areas for a trap trade. I just want to be clear. If we get back, we breach Globex low and get back above, and also yesterday's lows, which would be this area right here. There's also an open gap for backside test. Very easy to get responsive sellers here, again, by the way. But if we can get back above Globex low, we push this back potentially to yesterday's highs, right? Which would also, by the way, if we retest the highs, would have us above the prior high and would negate that potential double top, and we could easily push up into this zone. So again, not overly negative. We've seen the strength of the buyers be extremely strong again and again. And so until I see an actual weak day, I'm not going to buy into that scenario. Also, we have failed to penetrate. We're one timing in the market. We failed to penetrate the prior day's low yet. Clearly, we'll do that today. But that generally, that pattern that we get on that first day is not a long liquidation like this. But it's usually break prior day's lows or gap below, test a little bit below, and then come back up and close within the prior day's range. Doesn't always happen, but it happens more than we get a long liquidation to the downside. So that would be my commentary as far as econ and retail sales go. I'm not particularly worried about either one. I'll just let the market dictate where my trades are. Again, if you're concerned about getting blown through a zone, then what you want to do is push your rotations out to 8 to 10 points as opposed to 6 or 7 points. For me right now, 6 or 7 points is going to work unless I see this open drive lower, in which case if I do see an open drive lower, being inclined to push back to that 8-point rotation as opposed to a 6-point rotation for a counter trade. If you're a more conservative trader, it's certainly a valid idea. I'll be sticking with the 6-point rotation minimum and work my way from there. Let's go look at that's really my executive summary. Again, I want to just go over ES to make sure everyone understands exactly what I'm planning to do. At this point, if we open at 804 and it actually looks 1804, we are 6 minutes away. It looks like we're actually going to open on Globex lows. So that'll pit us right here. Obviously, I'm not going to be a responsive buyer on the open. I don't work that kind of guesswork. If we open up and then we have an open drive lower, I'm going to want to see that first 5-minute bar breached to the upside. And then even then, I'm not chasing it. What I'm looking for is a counter rotation lower. If I can get a good stretch and I can find a point, particularly after 9:30, where I can take one of these zones, I will look on a trailer for a move back above Globex lows. If we can get that, we will push to the other side. Again, this area I want to stress again, this 1810 all the way down to 1804 was poorly auctioned in the RTH, and I expect it to get re-auctioned. Excuse me, right here. I should go right here. I expect all of this to get re-auctioned at some point. That being said, you do have to be cognizant that we're jumping over the poorly auctioned area, and it simply could act as resistance to the downside and push us down. I'm just not going to call a big downside move with as strong as the NQ has been, and I'll keep my eyes on NQ to look for recovery. If NQ goes positive, right, I'm going to be more hesitant to try to stick a short to the downside, and I'll be sticking to my 2-point rotations unless we get extended to the upside. So that's the end of the executive summary. I'm going to go look at the profile really quick, and then, if I can, the trends coming into the day. So let's do that quickly if we can. Let's look at the daily on ES. Okay, so we're opening approximately 1804, which puts us right here. We have a small amount of supply right below that on the 24-hour, right, which would put us right into Globex lows. Below that, right, if we really get strong long liquidation, this area right here going right into the 1790, 92 area, and I believe that's what I have is that zone down there. Let me check real quick. $17.90 to $17.88.50. Okay, I'll be taking both of the. Obviously, I'm taking both of these zones anyways, or I'll attempt to take both of these zones. Initial support and the 1790, 1788. I will be looking to take those for a counter trade back to the long side, and with the proper rotation, this zone as well. So, countering that back to the volume profile. Okay, I would expect somewhere between here and here to get those responsive buyers in this area. Obviously, if we get below, this would actually provide resistance and a further move to the downside. Again, I'm not expecting that today, but the other day I didn't expect a 30-point drive up. So again, if we can go up 200, we can go down 200 or 300 as well. And this may just be the new environment we're in, where we get these large swings, and you have to be able to shift gears from yesterday where we're just kind of balancing and the first and second and third touches of the zones. And I want to be clear about this. First, second, and third touches of the zones work on a balanced day. On a non-balanced day, moving out of value, which we are, out of balance, that creates difficulty. Certainly for the third trade, I will not take it. And I'll be reluctant on the second trade. It'll have to set up very nicely. And if I do take a second trade, it'll have to set up right at the back of the zone so that I can have the best risk reward possible on taking that trade. Otherwise, I'm fine in missing a second touch each and every time. The focus is on the first touch. Last thought on that. On the upside, this area right here should provide a cap for us. Now I want to go look at the 24-hour. Again, guys, the more detail I give, it can get confusing and harder to make decisions. I want to emphasize, first time into the zone, that's where the focus is. So on the 24-hour, when we're looking at supply, really the argument would be from this area all the way down to this 1795. I would argue would provide support. Again, that's very wide, which is why we have to rely on the zones. And then below that, we're poorly auctioned right through here, which would bring us down to that 1793 area. If we can get below that, the concern is the next major area is all the way down here at 1770. Again, I just don't see it, particularly today, but maybe everyone thinks Armageddon is coming, and the way these markets have been swinging, you have to think in 200 to 300 point potential ranges, but with 100 points being more likely. Again, we're going to have down 100 out of the gate. So that's the summary. I hope that helped. I don't have time to go through the trend lines. Obviously, those are easy enough to do. I will post it as I see it, but I'm going to want to watch the first 5 minutes. I'm going to want to see where the tick is. So I'm going to bail so I can pay attention to that and make some money today. Everyone trade smart. Follow your trade plan. You should have a written trade plan and follow that no matter what happens. If you're overly concerned about getting run over in the first hour, that's fine. Counter trades are easier after 9:30 a.m. Keep that in mind. Anyways, we'll talk later. Have a great day.